today I'll be talking about investment appraisal. Now, investment appraisal is defined as a way that a business will assess the attractiveness of possible investment or a project based on findings of several budgeting and financing methods. Now, the purpose of this process is to determine if an investment is profitable, sustainable over its lifetime, considering factors like inflation and time value of money using NPV, net present value. Now, the second purpose is to identify and quantify potential risks and uncertainties associated with investment, helping to balance risk with reward. And last of all, it is to ensure that chosen investment support the company's broader strategic objectives and long-term vision. Now, the most common techniques are divided into two, NPV and IRR. NPV is net present value, which is the differences between present value of project after tax incremental cash flow and its initial investment. Now, the IRR, internal rate of return, is used to determine the rate of return of a project investment that will make NPV equals to 0.
Next, I will explain about the meaning of SME. SME stands for Small and Medium Enterprise. SME are businesses with limited employees and sales turnover that operates on a smaller scale than other larger firms. But SME plays a crucial role in economic growth and employment. Based on Article 2, small and medium enterprise dominates the entire business establishment all around the world. From Asia to Africa, SME is the key to wealth creation in improving their scale of living.
The next issue that I will explain is marketing issue. Why SME is often facing the issue? Because they lack the money to gain a high exposure and attract customer. While large corporations can afford to lose money on experimental marketing, it's the opposite true for SME. For small business, every money that being spent on unsuccessful marketing is a significant loss that can be used for a better options such as pay rent, payrolls, and sourcing a quality material. Furthermore, digital marketing has been evolved into highly skilled. So sometimes business owners they attempt to manage their own digital marketing but struggle to keep up with the rapid changes on platforms like TikTok and Instagram. This often leads to ineffective campaigns that fail to reach the intended audience. Other than that, larger corporations, they have already a brand recognition and customer loyalty. From the information that I state, we all know that consumer is more willing to purchase on a brand that they know rather than a brand that doesn't have any names. Therefore, SME need to work twice as hard and spend more just to prove to customer their legitimacy and reliability. Lastly, due to cash flow pressure, SME is often being forced to focus on immediate sales rather than long-term marketing. Since marketing can take a time to give an effect, SME owner is more focused on fast money to keep the business running. Unfortunately, this short-term focus can hinder the business from building a sustainable brand identity that can lead a greater success in the future.
The challenges that arise among Malaysia SME is financial challenges. Financial management is the main cause of business failure among SMEs. The most common problems identified by small firms are related to cash flow and inventory control. Most of SMEs also lack of access to financing that may lead them to struggle to secure loans or get financial support, especially for new or small enterprise because they can't meet the requirements and it making it difficult for them to secure the financing. Next one, poor cash flow is a common issue among SMEs. This may result to struggle for them to pay for the suppliers, employees, and utilities. This can also threaten the business position. When SMEs obtain loans, they often face high interest rate and short repayment period. This surely will increase the pressure, especially for businesses with small profit margin. The last one, weak financial management skills lead to inefficient use of funds and increases the risk of business failure. Overall, financial challenges faced by SMEs limit their growth and reduce the competitiveness in the market.
The process of investment appraisal are divided into 4 steps. 1. Company must first identify the investment opportunity. For an instance, the business may identify possible projects like expanding the operations or buying new assets. Second of all, the suspected future cash inflow and outflow of each project must be estimated using the incremental cash flow formula. Next up is the project will be assessed using appraisal techniques such as payback period, IRR, or NPV. And last of all, the business may now make a decision whether to accept or reject the investment.
For overcoming financial difficulties, the actions that could be taken is implementing prepared financial forecasting and project appraisal methods to improve reliability with creditors. Next, we have advice on the action to be taken using selected decision-making techniques. The decision-making needed for investment appraisal to demonstrate the existence and returns for future, the subject should adopt discounted cash flow method like NPV or IRR to evaluate major capital expenditure or growth of the investment. Next, risk assessment. One should utilize sensitivity analysis and scenario planning by testing business plan against different economic conditions. Thus, SMEs can better express the risk and strategies to investors. Furthermore, for working capital management, which we need to be dealing with inadequate capital and cash flow issues, one could use cash budgeting and inventory control models to forecast short-term needs and manage the liquidity in return, addressing the issues mentioned. Moving forward, the lack of management skills need enhancement in leadership and knowledge of financial systems. Action to be taken could include regulating management processes and decision-making for operation. For cost control, the common issue of it is poor time and cost management. By utilizing cost-volume profit analysis and standard costing, it could provide managers with timely data of profitability and variance analysis. Other than that, for human resource and training, which is often ignored due to cost and time consumption, by implementing benefit cost analysis, increase in productivity and product quality can be expected. Lastly, to improve marketing issues, because of the lack of marketing knowledge of SMEs, the recommended action to be taken is to adopt data-driven marketing decisions. For product quality and expansion, which need to maintain product quality and expand it, customer lifetime value analysis could be utilized. To avoid failing to maintain the quality and expansion, decisions on product designing should be based on broad data from target market. In return, prioritizing customers' loyalty.
Hi, I'm Afini. So, for the conclusion, this study concludes that the primary challenges among Malaysia's small and medium enterprises are consistently focused on access to credit, management skills, and marketing issues. Although financial constraints are globally recognized as the ultimate challenge, these 3 areas are identified as typical reasons for SME failure in Malaysia, underscoring their severity. For a better understanding of the reality facing local businesses, SME challenges should be studied collectively and specified according to the Malaysian context, moving beyond generalized discussions. Ultimately, while financial support is crucial, the research suggests that SMEs can enhance their survival and growth prospects by developing a solid management and marketing strategy. Next, we're going to solve the question given. So this is the question. First of all, the initial outlay. The initial outlay include the purchase price of new machine plus capex, which is installation and shipping, and make it 7,100,000 for the depreciable cost. Training costs and net working capital also will be added into initial outlay and make it 8,250,000 ringgit. For annual differential cash flow, year 1 until year 5 units sold and sales price per unit is given. So, In order to get sales, we must multiply between price per unit and units sold. Same with variable cost. We must multiply between the variable cost per unit, which is 140 ringgit, with the unit sold. For depreciation, it is mentioned in the question that this project is expected to last 5 years, which means the depreciable cost, which is 7,100,000, will be divided to the 5 years, and we will get 1,420,000. Sales subtract cost, and we will get earning before tax. After that, we will minus tax, which is 25%, and we will get earning after tax. Add back the depreciation, so that's how we get differential cash flow. Our final answer for total MPV would be 1,849,403, while our IRR is 23.39%.